How's it going, everybody? This is BeatTheBush. Today, I'm going to go over how to read an income statement from a public company. Now on my phone right now, I have a lot of different financial apps, M1, Robinhood, Stash, Public. All of these to me generally does not offer as much information as the Webull financial app. To me, this app offers a lot of information. I would say this is more for an intermediate to advanced type of trader. What used to happen is whenever I wanted to trade and I want to get really deep down into it, like look into earnings per share or how much stakeholders are actually selling their stock options, usually with this information, I had to go back to my desktop and access some brokerage account like E-Trade or something. With Webull, you can actually do this on the go, which is very, very important because most of the time you're just not sitting around at your desktop with access to all the fancy bells and whistles of a desktop application. So what this Webull app allows you to do is just to buy and sell. You can do your research right then and there. If you are at a hotel somewhere, if you're on vacation, if you're on a work trip or something, you still have the app with you. You have the phone with you. Whatever comes to mind, you're like, oh, I want to check out on the earnings per share. You have some investing idea that you want to research the company, you can do it right on this app. Now today I'm going to exclusively use the Webull app because within this app, you can actually access the income statement on the go. Many other investing apps are generally geared towards a beginner. You just put your money in and then they would either invest it for you or it becomes a very simplified form of investing where you can only buy and sell. If you guys are interested in signing up for this Webull app, between November 8th and the 27th, you can get a free $5 Starbucks gift card. If you deposit $100 or more, you're going to get a free stock valued between $8 and $1,000. So check out my referral link down in the video description below and get your free Starbucks card. Now, I'm just going to access some of the more advanced information that you can get on this Webull app. I'm not going to talk about every single little detail because that's going to turn into like a 1-hour lecture. So as an example, I'm going to bring up the app and then I'm going to go use Tesla as an example because I like the Tesla stock. I made a whole bunch of money on it. If you click the down arrow below those 6 groups of numbers over there, you can see a whole bunch of other information on this particular stock. Now, this is not quite the income statement, but I still want to go over all these different little metrics. The first one is open price, 318. When it opened up in the morning, this is the price that it was at. The days range between $314.50 to $326.72. This is just the maximum and minimum of that stock price within that day. You have the volume, which is 7.92 million shares. This is how many shares exchanged hands during that day. So if someone sold 100 shares, that would be counted as 100 in volume. The previous close, that is the previous closing date. So if today was Monday, it would have closed on Friday at $317.22. But because today is Wednesday, it actually closed previously at $317.22. So it was the closing on Tuesday afternoon. The market cap is $58.86 billion. How do you get the market cap? Is the number of shares that are issued with this stock multiplied by the cost of each share, which is $326. So if you do the market cap, $58 billion divided by $326, you're going to get the number of shares that is issued for this particular stock. If you look down a little bit over there, it says share outstanding. That is 180 million shares. So, if you do the math, that is exactly what it's going to be. If you divide 58 divided by 326. The average volume, it says 3M over there, which is the average volume for the past 3 months. It says it's 7.77 million over here. So this gives you an idea of what the average volume is. Sometimes when there's a lot of interest, suddenly the volume is going to double. So if you look at the actual volume right above there, it's 7.92. So you can kind of go, oh, okay, today's kind of like an average day. If it's a lot below, maybe half as much, and you can go, oh, okay, it's very low volume today, and you might wonder why. Maybe there's a holiday or something. And then if it's really high, like 14 million or 20 million, maybe something happened, like maybe an earnings release or something. So a lot of interest is into it. A lot of shares are exchanging hands. The 52-week range is kind of important because you kind of want to know if the stock is at its all-time high or all-time low or somewhere in between. For the last 52 weeks, it says $176.99 to $379.49. So at $326, you can kind of go, okay, it's almost getting to the all-time high. PE ratio, it's the price divided by earnings. And then you'll see right behind it is TTM, which is trailing 12 months. So they're going to add up all the earnings in the past 12 months. Usually it's in 4 quarters. Each quarter is 3 months. They're going to add all those up. So let's say Tesla earned $10 in those 12 months, $2.50 each quarter. So you're going to do 326 divided by 10, which is 32.6. That would be the PE ratio. Now, there's a difference between TTM and FTM, which is forward 12 months. So forward 12 months would be like what they estimate the forward earnings would be. This did not happen yet. So most of this is going to be a forecast if they do forward 12 months. So sometimes you can look at this PE ratio and kind of judge if the price for this stock is just. Usually when you look at PE ratios, you want to look at the industry standard. Within that industry, usually the PE ratio floats around a certain amount. Usually for utilities or something, it's going to be a lower PE ratio, closer to 10 or something. And then for tech companies, it's usually maybe 20, 25, or even 30. So usually if it hits 30, you kind of feel like, oh, that's kind of expensive. But there might be a reason for it. So you can't only go by PE ratio. So you might wonder for this Tesla stock, how come it's not available, N/A? It's probably because it's not a positive PE ratio. They have been making a loss, although usually for these somewhat new companies, they usually start off making a loss and then they get more and more revenue. And then at some point, hopefully, right, they switch over to a positive earnings and then they make a whole bunch of money and then they prove that the cost of their share is justified. So when you look at the actual earnings per share, it's minus 4.7824 for the trailing 12 months. So this is a fact. This is what they reported on their financial statements, and this is highly regulated, so they have to report it correctly. So minus $4.78. Every single share outstanding, they lost $4.78. So you can easily use the earnings per share times the number of shares outstanding, and then you can kind of get a gauge. Oh, they lost about, I don't know, $1 billion for the past 12 months. All right. And then over there you have dividend. It might be the quarterly dividend, it might be a monthly dividend, or it might be a yearly dividend. It looks like over here it wants to show a yearly dividend because right below it, it's dividend yield. So dividend is just how much money you get back. They're going to pay you this in cash. And then the dividend yield would be what's the cost of the price right now and what is the dividend that they gave you as a fraction of what the cost per share is. So let's say they gave $3.26 every single year, divided by $326, it would be a dividend yield of 1%. Generally, you can go look at the dividend yield. If it's 1%, you go, oh, okay, that's not so good. I could put my money in a high yield savings account for 2%. So usually for tech corporate companies, it might be like 0, and good ones might be 2%, so it's relatively low. And sometimes people go hunting for a really high dividend yield, and it might be something like 5, 6, 7% or even higher. So those metric would be the general stuff I look at whenever I look at a company, and it gives you a quick snapshot of the money that they earn and how the company is doing. Are they earning a profit? Because that's really important. That's the core of a business. They better be earning profit. But sometimes with Tesla, these high-flying technology stock where they go, oh, we're not going to earn a profit. We're going to take all our money and reinvest it into the business because they're in the growth phase. This has always been the argument why they could not turn a profit and why the valuation of a stock would still be really high, even though they're losing a lot of money. Anyhow, right below this, it says Elon Musk on Twitter says, Tesla plans what? I'm going to click on it. So if you click on that, it leads to like Elon Musk tweets and stuff. It's nice that it's integrated with those kind of things these days. And then over here on the graph, usually I don't really like looking at one day. Usually I pay attention to graphs that are a bit longer because I want to know not just what happened to that day, maybe like 3 months time span. And you'll see here, just recently when they released earnings that they made a huge profit, it made a huge jump of 25%. But, let me skip over that because we want to look at the income statement. So the cool thing about Webull over here is that they supply you with a whole bunch of information that you normally cannot access. And once you get to start trading stocks a bit, you kind of want to know more and more information. This gives you a bit more knowledge and possibly a leg up on other investors that just kind of look at the stock price and, just kind of cover their eyes and just blindly pick. So if you go down on this Webull app over here and you click on this little megaphone thing on the second icon, it would have insider activity. This is one of my favorite things to look at because you want to look at the executives that are executing their warrants. But most of the time, they don't actually know what they're doing, because if you look at the averages, when they sell at a certain time, it does not necessarily mean that you should sell it, because sometimes they might be vesting a lot of warrants, right? And these shares might be a huge portion of their portfolio. So if you just drill into insider activity, it's going to tell you all these high ranking people within the company. It says Baglino Andrew, I don't even know who that is, but they did all kinds of activity. In October 30th, he vested 2,000 shares of the Tesla stock and he sold it right away. And you can see on the second line, it vested at $207.90. Usually people within the company, they vest at a preferred price. And they have the option of selling it right away. And most of the time, that's what they do. Because when I used to work at a company and I got warrants, right, I didn't want to hold on to a big lump of the company stock because it gets to be a really huge number. I would rather sell it and then go buy an index fund, go diversify myself a little bit. So I am not 100% vested in a company. You probably shouldn't even hold like 50% of your holdings within that same company, or even 10%. Of course, if you work for, let's say, Apple, and you just hold 100%, it would have worked out. And I would say you might have been lucky if you did that. So it really depends on if the company goes up or down. Most of these people, they don't want to hold a huge amount of it unless, it's the CEO and he wants to show that he has faith in the company, that so he purposely holds more and more stock. Finally, I'm going to get to this income statement thing. Click on the fourth icon. It has this little folder thing. The first thing that you'll see is a bunch of key indicators. Return on equity, return on assets, earnings per share, book value per share, earnings forecast. So this is forecasted information. It seems like it wants to forecast the next year. It has the past 4 years for earnings per share, book value per share. And then finally, you have the income statement. And you got to drill into this to get to this information, but at least it's there. It's very important that it's even there so that you can go into it and look at it. Now, when you go into the income statement, it's quarterly information. So if you kind of swipe left over here, you can see the previous quarter and then the previous quarter, previous quarter, previous quarter. And usually, I can't even figure out what these numbers are. If you just look at one single number, let's say revenue, right? 6.3 billion, 6.35, I can't visualize this. So it's better to come back out and then go click on the revenue thing right in the middle. And then you can see a nice little chart and go, okay, yeah, the past 5 year information, you've been increasing your revenue, which is a really great thing. You can go, okay, 3.2 billion, 4.057 billion, 11.7 billion, 21.46 billion. It means, wow, they're selling a lot more cars. That's not their only business. They turn on their insurance business. They have their solar roof thing, their power wall thing, all those other things that encompasses this revenue. So anyway, let me go back to the income statement, because usually they don't have these pretty graphs for you. It might or might not, but the most basic thing that comes with most places where you can actually find an income statement is just going to be a very dry list of numbers in a table. So it's really good to get used to that it's in a table like this, so that you can just look at the current quarter and compare it to previous quarters, and then just look at each line and then figure out what the heck those things are. So looking at them, you can understand more information, how the dynamics of the company is changing, how its revenue is changing. So let's go through each one of them. Revenue, like I said, is not profit, right? It's just the cost of the stuff that they sold. So if they sold a Tesla car for $35,000, they did not make $35,000. So maybe the profit is quite a bit less than this. The cost of the revenue, they have to, buy the materials, they have to buy the machinery, they have to rent the factory and stuff. So how much does it cost them in order to produce these products so that they can get the revenue? And then you got the gross profit, which is 1.19 billion. This is the surprise for everyone, and this is the reason why it jumped up like 28% in just 2 days. So you see on the left column here, it has all these minus percentages. It's year over year percentages. So this is going to compare 1 year earlier what kind of metrics they did as a company. So it's saying that it's minus 21% in gross profit. Last year, they made a little bit more. This year, it's 1.19, but I think these numbers are a little weird, because usually as a starting company, they use their capital in all kinds of weird ways, and sometimes they don't turn a profit because they're reinvesting it. Marketing and administrative expenses. All right, this is pretty much self-explanatory. Research and development costs, they have to put money into researching how to build the product, I guess. So some of these line items, they don't report. Financial expenses, depreciation and amortization, other expenses. All right, they don't have any of that. Total operating expenses. What the heck is that? It means to run the company, they have to pay the electric bill. Maybe they rented a building, they have to pay the lease or something. They also have to pay salary. So when you add all these up, how much does it cost the company to operate it? It's $6.04 billion. Operating income is an important thing because this is after you factor in all the operation costs. How much income do they make after they sell the product? They have to subtract out all the expenses they have to pay for salaries and all this. So this is how much they actually make. You can kind of think of this as after everything, how much does their balance sheet increases by, right? This is $261 million. This is what they get to put into their banks. Interest income is $78.8 million. Now, sometimes a company can have positive interest income if they kind of lend it, invest their money and they're getting dividends and stuff. But in this case, it's a minus 78 million because they borrowed money from somewhere. And so they have to dole out this interest. That's why it's a negative number. So it would eat into their cash flow. Other non-operating net income. So in other ways, they are also needing to pay up some money. Non-operating income, a total 78.8 million. Most of these line items are somewhat important. It depends on the company. If there are something that's very outstanding and you want to go, oh, you didn't make as much income because you did so and so. So it would show up in this income statement. So that's why it's so good to look at these line items and if you can just figure something out from it. Then you have net income before taxes. This is your net income before they subtract out the taxes, $176 million. Provision for income taxes. So this is, they just got to take some out because they got to pay income taxes on it. Your net income is $150 million. Now let me skip to diluted earnings per share because this is important. They didn't offer basic earnings per share, which is just how much they earn per share of stock. So you just take this number and multiply it by the number of shares outstanding, and this is how much the company earned in total for that quarter. So we learned from before in the very beginning that the shares outstanding is about 180 million shares. If we do 180 million times 0.78, it's 140.4 million. So as you can see, this income statement really breaks down a bunch of numbers that our company would give rather than just one single number saying, oh, this is how much we earned for the entire quarter. Instead, they go, okay, this is our revenue. This is how much we spent in this category. This is how much in interest that we paid in certain things, how much our interests are, how much our marketing, administrative expenses are, how much our research and development. Let's say the revenue was $1 billion and then they have a 50% margin on it. So then they take in 500 million, but then they plop this 500 million right back into research and development. So then they're going to make $0. So in those cases, if you think that they're doing the right thing, it might be okay for that company to not earn any money in the short term. If they keep on doing this and the company isn't really growing, then it might not be justified that they keep on pouring money in and it's not actually returning anything. In terms of returning on something, the return could be either in profits or you can see that the company is growing really fast and then they're making more and more revenue. So if you go down a little bit, you can see cash flow. This is kind of important because as a personal finance person, I like to look at cash flow. I like to have a positive cash flow because whenever it's positive, that money goes into your savings and it grows your bottom line, grows your net worth. So for cash flow, you can see the past 5 years. For 2018, they actually had a positive cash flow of $2.1 billion. This is pretty darn good. And then if you go down a little bit, it's going to have peer comparison. Auto and truck manufacturers, I feel like this is a very dangerous thing to look at. This is why you want to understand the industry. You want to understand car companies, right? Tesla is it really a car company when it's a fully electric and it has no investment in gasoline powered cars? It's kind of like a tech company even. So when you look at earnings per share minus 4.7 and they're ranked number 16, it says there's 18 car manufacturers. All right. Book value per share, rank number 3. PE, price to earning ratio, trailing 12 months, rank 9. I think all these numbers over here, they're automatically generated, and it's pretty much useless because it's hard to compare this company to other car companies, basically. So, even though it gives you a lot of information, one tab or another, you gotta know what you're looking at and not compare it to another stock and then just look at the number just like that. And you just compare two numbers just because they're the same metric. You got to realize where it comes from. So thanks for watching this video. I hope this gives you a good basic overview. There's probably more detailed things, more complicated things that you can go through. You can chart out all kinds of crazy things, moving averages, exponential moving average, Bollinger Bands, all kinds of things. Whatever your own flavor is that you can go in there and chart it out yourself. Again, if you guys are interested in this app and you want to trade on the go, check out my referral link down in the video description below. You can get 2 free stocks worth somewhere between $8,000 and $1,000. And right now, if you sign up, you can get a Starbucks gift card. This offer is valid between November 8th and 27th. So get it while the getting is good. Thanks for watching this video. Don't forget to give me a like, comment down below. Let me know if these tips help you out and help you how to invest a little bit smarter. And as always, don't forget to push that subscribe button and ring that bell icon. Thanks for watching.